I am not here defending the particular actions of real-world institutional asset managers in 2025, all right? I am sure if I had a little drone following some of these people around and I saw the deals they're doing and the decisions they're making behind closed doors, I probably would say in a lot of cases, I think that's unethical what they're doing, or possibly illegal, but they know they're going to get away with it, okay? So that's not what I'm here doing, is defending them right now. What I am saying is, first of all, what I'm going to do is show that in a market economy, there could be a role for institutional asset managers getting into residential real estate. And I want to explain how that would work and show that there's not really any danger they would pose.
Welcome to InFi, the future of finance.
Hey everybody, welcome back to the InFi podcast. I'm going to go solo again, and what I'm tackling in this episode is a qualified defense of institutional asset ownership. All right, so that's something that we talk a lot about in blockchain-based finance circles with things like, oh, hey, looks like the big boys are getting into Bitcoin or launching Bitcoin ETFs and whatever, and then people who have been in Bitcoin for years argue about the pros and cons of that, right? So that's one area where this type of discussion comes up in fields related to what we do here at Infineo, where we're putting life insurance on the blockchain. So that's where I see it. And there typically it plays out where the people who are optimistic and think these are good things say, hey, this is just normalizing Bitcoin, legitimizing it, making it less of a weird thing to own. And that can only be good for those of us who want to see a future where just about everybody on planet Earth has some Bitcoin. That surely, if you want to get to the point where everybody on planet Earth owns some Bitcoin, that has to include major institutions. And at some point, probably they're going to have a mass wave of adoption that will then snowball and bring other people on board who have been resisting. So it's sort of like, what is it? Like, do you just want to complain? How could it possibly be that Bitcoin replaces fiat currencies and gold, even for those who are really big on Bitcoin, as a financial asset or money-like, or some people just say, no, it is the money of the future. Okay, well then various governments and institutional asset managers are going to hold it then. Like if what you want has comes true, that will have to happen along the way. So you shouldn't be complaining when it starts to happen. So that's one thing. I understand the objections. People who are saying, no, the whole point of Bitcoin was people could be off grid, and this was the way our escape hatch to get away from the central bankers and the World Economic Forum types. And so now they're just co-opting it. I understand that. I'm not making fun of those people. I get it. But I'm just saying, here I am immersed in these controversies in another area where I have seen this sort of straightforward, maybe even libertarian approach of, hey, I mean, if an individual has the right to buy an asset, if thousands of individuals pool their capital together and form some big institution, and then collectively in the name of that corporate charter, they go out and buy stuff, what's wrong with that? Right? It's all voluntary. And then like sort of the populist people, whether on the right or the left, object to that and say you're being incredibly naive. And no, here's the reasons that this is just further evidence that the walls are closing in on us and the big corporations are taking over. Okay. So again, with my glib summaries here, I'm not making fun of anybody or saying one side is totally right and the other side is totally wrong. I'm just saying I have seen this stuff in other areas. And one in particular that I've seen a lot is with institutional private equity entering into the residential real estate market. In particular, companies like Blackstone coming in and buying single family homes. Like for a lot of people, that was sort of the Rubicon that, hey, this is something screwy here. This isn't just, big asset managers or, life insurance companies funding the construction of giant apartment buildings or something, which has been going on for a long time, or skyscrapers. But this is private equity companies, firms, just all they care about is giving a return to their shareholders. And they're going out looking at real estate deals, and they're even now buying just single family homes, and they're getting into that sector. And a lot of people think, that's something horrendous. I think it was on when I was on the Tim Pool show that this issue came up, and there I kind of gave a qualified defense of it and saying, I think there are benefits to this practice. And my big picture takeaway was, and what I'm going to elaborate on in this episode of InFi here for you folks, is that the various things that you might have a problem with in terms of in the real world right now, what is happening on the ground is not because of institutional asset management per se getting into this sector. That the other types of things that could be involved are driving, I think, a lot of the results that are things that worry you about this. And so then I would argue, if you go and say, well, why are those other things happening? And you'll see it's because of government interference with the standard operation of the market economy. And so then it's kind of weird to look to government to combat the very problems that it's other areas of government that are causing it. Whoa, stop the presses. I'm here from the future to give more information about this episode. What happened, folks, is I went through and recorded what was largely a defense of institutionalized house flipping. In other words, I proceeded to explain why, quote, Blackstone could be providing valuable services to the community by coming in, buying a home on the front end, holding it for a bit, perhaps doing some renovations, and then selling it down the road for a higher price than what it paid for it. And I walked through and did the whole analysis of that, partly because to me, that's like the essence of what a private equity firm does. Like if you're thinking of, Mitt Romney working at Bain Capital, they'd find some company that they thought was underpriced. They'd snatch it up, maybe get rid of the deadwood, which is a euphemism for laying people off, and, spin off certain divisions, blah, 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 and then sell a thing for a hefty little profit down the road, right? And that's what they would just, churn, rinse, and repeat. It wasn't that they were buying something to be long-term holders, okay? And when it comes to real estate, especially residential housing, coming off of my experience of hearing people talk about the housing bubble years in the mid-2000s, to me, I thought, quote, the worst case scenario for like what would greedy investors do that would screw up housing and do something that wasn't in the public interest. I thought it would be, surely buying up homes, pushing up the price of housing, and then holding them off the market so nobody gets to live in the house because they think conditions are advantageous in doing so, and that they're going to keep it off the market and deliberately withhold supply in order to raise prices. To me, I thought, if I can defend that, then anything else is a piece of cake, right? So that's what I was focusing on. But then when I got all done recording, I realized, in the real world, Blackstone's actual business model, if you go to their website and look at it, they don't do much of that at all, right? They may do it here and there, but no, their main model is buying up properties, perhaps renovating them, and then renting them out to tenants. And that's what Blackstone is doing, okay? And so they are going to hold the real estate indefinitely. They're not looking for a speculative gain. They're not flipping. They're buying and renting it out. And so in the context of Klaus Schwab and the WEF saying in the near future, you will own nothing and be happy, and a lot of the people who are against Blackstone, that they erroneously would call BlackRock often, getting into this area, they don't like it. They're also a lot of the same people who really don't like Klaus Schwab. By the way, I don't like Klaus Schwab either. Okay, I did a whole series on my personal podcast talking about his background and ties to various deep state players and so forth. Okay, so I realized once I was done recording that in my effort to defend what I thought was the worst case scenario in terms of, putting profits above people, or geez, there's homeless people on the street, and meanwhile these speculators are keeping vacant homes because they think they're going to earn more if they just sell down the road. By me focusing on that, it may have looked like I was ignoring what it really was about the Blackstone situation that was really bothering certain people, particularly like a Daryl Cooper. Okay, so I just said, like, the case I made, you still need to know. Like, that's kind of the bedrock explaining why, in my view, you want speculators out there who buy low and sell high when they think an asset is under or overpriced according to the fundamentals. And so you kind of need that as the background. But then after I make that case, I will come back and give the addendum as to the case of Blackstone in particular. And with all this stuff, I'm not literally defending a particular real world company. I haven't investigated all their actions, and I don't know if, maybe they really are being shady or something. I'm talking about the principle, the concept of it, because that's what was bothering people on social media primarily. Just the very idea that there's these big asset management companies coming in, or private equity firms in the case of Blackstone, and just massively buying up retail housing and then renting it out to people. That just offended them per se. It wasn't the particulars of each case or something. All right. So that's what I was trying to defend, or am trying to defend per se. And last bit of housekeeping. When I explained the situation to our video editor, and I thought I was going to have to put the same shirt on, I think he said, no, put a different shirt on, put a blue shirt on. And so what we're doing here is, again, the gray shirt was Bob from the past. The blue shirt is Bob from the future. I think probably my hair is a little bit more frazzled too right now. I've looked at the mortgage-backed security charts. I know too much now, and that's why I look like this. Okay, so here we go. The case made by past Bob about just the general institutional dabbling in residential real estate. And then after you hear that, Bob from the future with the blue shirt will come in again to explain more about Blackstone's particular business model, which is buying and then renting out. So let me first give you the specifics. I'll flash up here what set me off on this tangent in terms of my daily routine. So I'm just sitting there minding my own business on X/Twitter, as I'm wont to do. And then I came across this guy, Brett Pike, said, why is BlackRock allowed to buy single family homes? And he had a ton of hearts on that. People were sharing that around. Before I go any further, let me just mention, this guy was mixed up. BlackRock is the much larger asset manager, and what the guy I think meant was Blackstone. All right, so it's Blackstone that is directly involved with buying now single family homes, whereas BlackRock does not directly do that. Having said that, people were arguing and saying, well, BlackRock and these other big Vanguard and whatever, they invest in things like Blackstone. And so, it's kind of a distinction without a difference. All right, maybe so, but I think this guy just got mixed up. Okay. So in any event, he says, why is BlackRock allowed to buy single family homes? So I was just being a bit cheeky and retweeted that and said, why are people allowed to sell their homes to BlackRock? Okay. Because that's the other side of the exact same transaction. So my point there being that it can't be that it's not like a mugging where there's one winner and one loser and it's a negative sum transaction. I'm saying negative sum because if a guy sticks a gun in your belly, takes $100 from you, it's not just that he's up the 100 and you're down the 100, but now you're scarred for life. That's a very traumatic experience. So it's like you in a sense lost more than just your $100. That's why I'm saying it's negative sum, the whole interaction. Okay, so but here my point is, I'll just say Blackstone from now on to try to be consistent. But Blackstone coming in and they're saying, oh my gosh, why does the government allow them to go up to somebody who's selling their house and make a bid and then buy the house from that person? This should be illegal. Why is the government allowing this? And I'm saying, okay, but the flip side is the person who's selling the house has all these bids and goes with the one that Blackstone gave them. That person, the only reason Blackstone is getting away with buying homes from people is because people are voluntarily selling their homes to Blackstone. So there's that element of it right there that, and so your analysis, you should be thinking of that and including that. And later on in this episode, when I try to explain some of the benefits of having institutional management get into the residential real estate market, that's one of the things I'm going to bring up. Okay. But I'm just saying right here, that was the point of me retweeting. I didn't think I just did a mic drop and I ended the discussion. I was just being a bit cheeky. Okay. So then Daryl Cooper of the popular and controversial Martyr Made podcast chimes in. And this is kind of, I lamented that I believe this is the first time he's interacted with me publicly. I've been following his stuff, and on my other podcasts, we occasionally, go through his material and whatever. And I often am defending him from his critics. And so, look at Martyr Made chimes in and he ratios me. in the more recent definition of that term. Originally, if you got ratioed on Twitter, it meant that you would make a post and the comments, the number of comments in the reaction to what you said divided by the number of hearts. If that was bigger than 1, you got ratioed, meaning more people were commenting on what you said than hearting it. And presumably they weren't commenting to say, wow, that was so awesome. Glad you typed that up, but they didn't click the heart. That's originally what ratioing meant. But I've seen now that usage has evolved. So now if somebody comments below your original one and they get more hearts than you did, then that's also considered a ratio. So that's the sense in which Marner ratioed me here. And he says, it's exactly the kind of coordination problem government at its best is meant to solve. It is in the interest of each individual seller to sell to BlackRock, sick, but it's collectively against our interests, including the sellers, for private equity to be a primary residential real estate broker. All right. So because of that interaction, which just happened earlier this week, that's why I thought, okay, that makes sense for me as I'm recording InFi for this week's episode to go ahead and spell out what I think Daryl's missing and plenty of the other people that piled on me for doing that. One guy retweeted me and said, I regret to inform you folks that the libertarians are at it again, defending their, quote, ideology, right? Because again, this crazy notion that people should be able to do with their property what they want. Oh, you libertarians, you. And not, selling cocaine, but selling your house to this buyer over here rather than this buyer over there. Like, that's just, wow. So anyway, I imagine those crazy libertarians saying, yeah, there's prima facie reason they should be allowed to do that. And if you're going to come in and say that should be illegal, you need a pretty good explanation involved, not just, Blackstone or BlackRock, are you kidding me? Actually, that's kind of funny now that I think about it, that it's sort of like Tucker Carlson asking Ted Cruz how many people are in Iran he didn't know. And also a lot of, including Daryl Cooper, people along those lines thought, it's kind of crazy that you're calling for us to go to war with this country. You don't even know how many people it has. And I'm saying likewise, there are a bunch of people that really wanted to make it illegal for BlackRock to go be buying houses like it is, when what they actually meant was Blackstone. So anyway, another person, I'll mention this now before I lose it when I get into the particulars here, and this epitomizes one of the main points I'm trying to make here in this episode. Another person was arguing with me, and he said, well, Bob, you're being naive. This isn't a laissez-faire free market. Yeah, if it were, then you might have a point. Okay, and here he was referring to the Orrin McIntyre was somebody else who tweeted out something, some news article talking about the growing role of private equity and residential real estate or whatever. And Orrin said something like, for any politician who's concerned about saving the republic, this should be illegal. Okay. Or no, these people should be thrown in jail. That's what he said. Okay. So he didn't just say this practice should be illegal. He specifically wanted the people who were involved with this kind of stuff, meaning, dabbling in the residential real estate market, that they should be behind bars, and that any politician who cares about saving America should go ahead and do that. Right. So I'm arguing with this guy who's defending that viewpoint, and he's saying that my little glib one-liners might have some relevance in a libertarian laissez-faire world, but we don't live in that world, Murphy. We live in a world, for example, where the government bails out these big institutions when they screw up, right? Like, look what happened after the housing crisis and the financial crisis hits in 2008. All the big boys, except some of them that weren't politically connected, got bailed out, right? And the Fed comes in and starts buying up mortgage-backed securities. The Fed didn't go in and rescue individual homeowners who were underwater. No, they could go down. This is capitalism, and we can't do that. That would be socialism. Oh, but what we can do is have the Fed buy so-called tax-like assets and save that sector. So at the time, just to be clear, everybody, I was totally against the Fed doing that. I even wrote an article called The Great Bank Robbery of 2008, where I was against TARP and everything. So I'm being consistent here. But what I said to the guy was, okay, so you're saying the government should throw these people in jail because the government knows down the road, if we let them do these things, we're going to bail them out. right? So the government should throw them in jail because the problem is down the road, the government will bail them out. And I said, I can think of an easier solution to this, right? So what I meant was, if the real issue is government bailouts of these big firms, that's the policy that should be corrected. And notice too, it's kind of crazy, like, given that the government is going to bail these people out because they're politically connected and it's all a big, it's a big club and you're not in it kind of deal. It's a club for the big boys. Then we're just wasting our time here, right? Calling for, hey, somebody should look into this stuff and put a stop to this. Well, if your justification for why that should be done is because the system is corrupt and these guys are getting taxpayer bailouts anyway, that seems kind of naive. All right. Why don't you? So that's kind of my point here is I'm trying to isolate and say, let's at least be specific and clear about what the actual problems are. And then, yes, after having gone through that, if you still want to say, yep, after further review, the play stands, these people should all go to jail because that's the only way to get this done. And given electoral realities and whatever, we can't roll back the policy of bailing them out on the back end, but what we can do is put them in jail on the front end. Okay, if you want to say that, fine, but just be aware that that is what you're saying because that's kind of a convoluted position. All right. Another disclaimer, sort of piggybacking along with that. I am not here defending the particular actions of real world institutional asset managers in 2025. All right. I am sure if I had a little drone following some of these people around and I saw the deals they're doing and the decisions they're making behind closed doors, I probably would say in a lot of cases, I think that's unethical what they're doing or possibly illegal, but they know they're going to get away with it. Okay. So that's not what I'm here doing is defending them right now. What I am saying is, first of all, what I'm going to do is show that in a market economy, there could be a role for institutional asset managers getting into residential real estate. And I want to explain how that would work and show that there's not really any danger they would pose. And then at the end, we can try to address some of the real world concerns and then point to possible problems. And then, but again, the point of that would be to isolate and say, okay, so if those are your issues, really, when you think about it, why don't we address those things rather than holding up a policy proposal that wouldn't even solve the problem on your own terms? Okay. And then would also interfere with these other things that are benign. Okay. So that's what I'm doing here. Maybe an analogy would be like with drug prohibition, or you can even make it easier, like alcohol prohibition, right? So during the 1920s, it was illegal to sell alcohol. And I can, as a free market economist, point to all of the problems with that policy. And I can say most of what people had a problem with in terms of alcohol use got worse during Prohibition. And then in particular, if somebody in 1928 was like, man, it seems like all these people selling alcohol are criminals. There's a lot of bloodshed and geez, drive-by shootings and all kinds of stuff. And there's lots of people dying from drinking tainted liquor. And boy, that's just, man, how could anybody be in favor of alcohol? It's demon rum. Geez. And I could sit there and go through and explain, well, no, you see, everything you just said is made so much worse because of alcohol prohibition. And if we had a legalized market with big reputable companies with name brand recognition, you would have products that, people would still drink too much. They would get into bar fights, marriages would break up, so on. But at least you would take the crime element out of it and, so on. You go through and the product quality would be much more ascertainable rather than people making it in their bathtub or something and then, selling it unlabeled flasks that nobody knows what the heck is in that. Okay. If I went through that exercise and somebody said, oh, so you're saying Al Capone is a good guy? I say, no, that's not what I'm saying. I'm saying the reason Al Capone is in this sector is partly because of the prohibition. So likewise, I know right now we don't live in a laissez-faire free market utopia. If we did, I wouldn't have a job, right? Because that's mostly what I do is complain about the government and all the problems it's causing, right? So I understand that. And yes, a lot of big business is in bed with big government, and there's all sorts of cozy relationships, and there's all kinds of backroom dealing and a lot of like the Federal Reserve's policies. Certainly what the Fed did in the fall of 2008 had nothing to do with just trying to promote stability in the financial markets and rescue the housing sector. Like I said, why didn't they come in and just rescue people who were underwater on their mortgages? They could have done that. That would have been cheaper than all the rounds of QE and stuff they did, right? So I get it. And my point is, if you look around and you are unhappy with the state of the U.S. economy or the U.S. housing market or real estate market, it's because I agree with you. There's all sorts of government policies that are wrong. But I'm saying the policy that's not wrong is, they should crack down harder on these private equity companies. Just like if, as of 1928, you're looking around saying, man, there's a lot of problems tied to alcohol. They should really, the government, Kevin Costner needs to come in and get more men to work with him and really clamp down on this. This is crazy. All these gangsters going around trying to sell liquor and stuff. I mean, these people going to these speakeasies and whatnot and then coming home hammered and slapping their wife around. They really should make it even more illegal. They should ramp up the penalty, right? And I'm saying, no, that would be the wrong approach. And I'm saying, likewise here. Yes, if there are problems that are legitimately happening and that it's hard, for example, for young people now to get into their first home compared to 30 years ago, the problem is not because it's currently legal for big companies to buy houses. That's not the issue. I'm pretty sure it was legal for big companies to buy houses 30 years ago too. Okay, so it's not that there's been some relaxation in a government policy that caused it. It's not that there's too much economic freedom going on. And man, if we just didn't have so much liberty, then people would be able to afford houses again. That's the completely wrong-headed approach to this, is what I'm saying. All right, so again, it does not refute what I'm saying in this episode for you to point to particular practices by giant corporations right now and saying, I don't like that. In a just world, that thing wouldn't happen. That outcome wouldn't happen because it is entirely possible that it's government regulations causing that. And that to then go to the government that's causing that very problem and say, hey, we need you to crack some more skulls or to throw some more people behind bars, that's naive and certainly is not going to work. Okay, if I'm right in my analysis. Okay, I could be wrong in my analysis, but my point is what I'm about to go through with you folks here in the balance of this episode is entirely consistent with big companies in the real world right now doing naughty things. I am not saying big companies only do good things, therefore it would be inappropriate to try to rein in Blackstone. That's not my argument. Okay, so I guess at a very basic level, and this kind of ties into my original tweet there, the way a company like Blackstone is going to make money in the real estate market is they have to buy homes from sellers and then sell them down the road to other buyers. Right? That's one way. Or they can buy them and manage them and then rent them out to tenants and maintain ownership, right? Or, they can work with other organizations and do things collectively. But those are like the two main ways that you would, quote, make money by buying residential real estate. As again, you buy it in order to flip it, or you buy it in order to rent it out. Okay? And so again, going back to my original point on that tweet, right off the bat, just notice when you say, how does it help anybody to have Blackstone or companies like them in the market operating side by side with what was happening before? Is okay, so if somebody wants to sell a house, they don't have to sell to Blackstone, right? The only reason someone's going to sell to Blackstone is a combination of things that makes the offer more attractive to the seller, right? It's either the price is higher or it's coming like as a cash offer and then it's just easier to get to closing because you're not having to deal with the bank and the mortgages and all that stuff and the appraisers coming in that Blackstone can just write you a check without having to go through a bank, that sort of thing, right? So there's various reasons that someone does that. And so when you say, how does this help regular people? Well, anybody who wants to sell a house, that person is helped by having Blackstone in the mix. And in particular, by having more liquidity, what that does is allows someone who, especially if they're on a tight schedule, like, somebody's job gets relocated, right? And they really need to move to another city 2 months from now. Like employer just tells them, yeah, we need you in Cincinnati. And right now, they're in wherever, Boston. And geez, okay. And so they got to decide, well, I could try to rent my place out, but that's the pay. I don't want to be dealing with that and having tenants and stuff while I'm starting this new role in Cincinnati. And I got to deal with setting up my place, out there. I'm going to have to go out and like live in a hotel or something for a bit. Right? So there's a lot of difficulty and headache. And so you might want to sell your house. But in general, it's a long process with a lot of headaches and a lot of oversight that you need to engage in order to sell your house and get, quote, a good price for it. You have to obviously clean the thing up. There's a lot of like maybe repairs you got to do to get it ready, stage it, have showings where you got to, leave the place and let there be open houses and stuff like that. All right. So there's all kinds of stuff because it's not like selling a stock where the market price is what it is. With a house, when you say like someone looks at your house and they say, oh, what do you think that's worth? And you say, whatever, $340,000. What do you mean when you say that? You don't mean I could sell this house next Tuesday for $340,000. What you mean is in a normal market, like with market conditions as they are, if I had a good 3 months to go get a realtor and everything and get ready and just spend a lot of time on it, I could probably, when all was said and done, sell this thing and bring in $340,000 if I had to guess at the number. That's what you mean, right? It's a much different thing from someone saying, oh, I see you own some shares of Apple. How much do you have? How much are your Apple shares worth right now? And you give some number. There, you really do mean I could have that money in my brokerage account by tomorrow. I could just, program it in to sell, and then, the things would settle. And tomorrow I would have that money in my account, the cash. And so economists, what's the distinction there? It's the issue of liquidity. Stocks are far more liquid of an asset than a house is. Okay. Liquidity is different from market value. It's not that houses aren't valuable. It's just they're illiquid. All right. And so when you say what you think the price is or the market value of a house, typically what you mean is if I had the time to find the right buyer. Okay. So in a case where you don't have the time to do that, or a different example, an elderly person dies and then they look at the will and, his kid is the executor of the estate and the kid lives in a different state. And they come in for the funeral and everything, and he's got to deal with going through all of dad's stuff. And in particular, he has to sell the house, because what's he going to do with it? He doesn't want to rent it out. He don't want to deal with it. And so he might want to just get rid of the thing. He doesn't want to spend 3 months flying back and forth, finding somebody. He just wants to sell it to somebody else who will deal with cleaning it out, doing the repair. Oh yeah, that back porch really ought to be repaired and the whole thing probably needs to be painted and blah, blah, blah. Oh, you know what? This really hasn't been updated in decades. We got to put in, there's not even a garbage disposal in this, but right, to go through and do all that kind of stuff where if you were willing to put $20,000 into it, it would raise the purchase price 8 months from now by $30,000. So it makes sense to do it. The improvements, quote, pay for themselves, but it's not like a pure arbitrage. It's not like you see something selling for $10 on this side of the street and someone over here on the across the street is offering 15 for it. And you're like, oh, wow, I can make $5 just by crossing the street. No, this is pouring $20,000 into something and waiting 6 months or 8 months, whatever I said, in order to get 30 back in terms of the increment in the final sale price. Okay. So there's lots of situations like that. And I'm saying in a different context, right, where somebody's pinched like that, they have capital constraints, right? Because maybe the son who's dealing with his dad's estate doesn't have an extra $20,000 lying around. Like he knows that, yeah, if I had the money and could sink it in there, that would more than pay for itself. In fact, there's a sense in which it'd be a 50% return on my investment over an 8-month stretch. That's a really good rate of return. But I just don't have $20,000 free right now to be able to do that. Okay. And so you can imagine a different context, critics of capitalism pointing at that kid, well, who might be a grown man, and saying, see, this is the failure of laissez-faire. people are caught in this situation where it's, the rich fat cats come in and now, they can just lowball and buy the house at a bargain price or whatever because this poor guy doesn't have the fund. And so I'm saying having a nationally operating large institution that has algorithms in place to identify places like this is giving that kid an option that he doesn't have to exercise. It only helps someone in that position to have another potential buyer. Again, if Blackstone weren't involved, whatever the kid's options are going to be what they were. So he's only helped by having some institution there that has a lot of capital behind it that can say, oh, yeah, you don't have $20,000, well, we have $20,000 to spare. And so we'll write you a check and boom, you don't got to worry about, the banks coming in and things like that. No, we sent our people in, we looked at it, we'll write you a check next week. You want to go ahead? Right. So that's the kind of thing that, on the front end, all those people are helped. That's, again, part of why having middlemen helps in general. Just to forget the real estate kind of, just in general, like in the stock market. Why would you want a hedge fund or some other kind of institutional asset manager out there with computers just, running algorithms and scanning the markets looking for mispricings? It's because if there's some kind of liquidity event, something happens and a bunch of people for some reason are selling, and that's pushing the stock below of a particular company. And for some reason that's pushing the stock price below what, quote, the fundamentals are, then some other entity that's got a lot of capital at its disposal, a lot of liquid funds, can see that and say, wait a minute, according to our models, that share price should be $80. And yet right now it's trading at 72. And so, we'll swoop in and buy that. And that helps the people who are in that situation who need to be selling for some reason, because again, maybe they have a liquidity event or, maybe there was some kind of legal ruling or whatever, and they have to dump their holdings of that stock. They just got to take whatever the market will, they got to sell it within a week, and they just got to take whatever the market, will bear. And so in a situation like that, where you're hard pressed and you need to sell quickly, you want there to be institutional middlemen who are not in it for the long haul, but whose function is to buy low and sell high. You want them there because by them doing that, whenever they see an asset, which could include a single family home, whenever they see it below its, quote, fundamental price, they come in and buy it. And then they wait for the price to recover and then they sell it. All right. And just think of it that way. So when the price is below, it's kind of long run fundamental appropriate level, they come in and buy. And then if for whatever reason the price drifts upward and that asset is overvalued in some sense, relative to the long run trend, then that's when they sell. So think about what that does, right? Without them, you can imagine the price of the share of stock or the house, whatever, real estate in a given city is, bounces around. It's volatile, goes up and down over time. Most of these assets are going to drift upward in price, right? That they have a long-term trend upward, but around that upward trajectory, there's massive volatility depending on the asset. And so if you have some deep pocket institutions kind of on the sidelines just looking around and seeing these trends, if they're profitable, if they're accurate, and they really do have a knack for identifying when the price left to its own devices would be below trend and when it's above trend, and they come in and try to arbitrage accordingly, what's the net effect on the evolution of that asset price? It reduces the volatility because they come in and they buy when it's low. So what happens when they come in as an extra buyer, augmenting the existing, quote, fundamental demand? That pushes up the price compared to what it otherwise would have been. And then on the flip side, what happens when they think, some of these assets, they've in a sense held off the market, so restricted the supply. And so now the price is recovering. Oh, but it overshoots. Maybe they've held off too much of the market. What do they do then? They release it back into the market. And that pushes the price back down, right? So over the long haul, if you're thinking of like a sine wave on a line that's drifting upward and to the right, if you're looking at a chart, the amplitude of that sine wave is lower. right? The highs are lower and the lows are higher than it otherwise would have been. Again, if this institutional asset manager is profitable, if they're wrong and they come in and they buy right near a peak and then the thing crashes and then they sell, thinking they're getting out early, but no, the thing turned around and went up after they sold, then they're going to keep losing money. And over time, they go out of business. Okay. So again, I'm not here saying third party sort of middlemen buyers who provide liquidity always make things better. I am saying if they are profitable in the long run, if they do tend to buy low and sell high, then that's actually helping everybody else. That's making the market less volatile. And that helps everybody. Because again, it means if you're in a pinch and you have to sell rapidly, like if you're talking about your house because your job gets relocated, there's a death in the family, or your parents get sick and you need to move back home to take care of them or whatever. There's lots of reasons in the real world that people might need to sell their house quickly. And so you want there to be this institutional buyer that's willing to, put a floor, right? Without them, if you had to sell your house to just somebody who was going to move in, the best person you could find, maybe they just don't have that much money. Maybe their income's not very high. And so in terms of the mortgage they can get and whatever. And so you got to accept a price way below what if I just had 6 months to market this thing, I could get a much better price, but I can't wait. I got to take this offer. And so no, to have some outside corporate entity that is willing to let the house sit vacant for 6 months, right? So that's the thing too, is a lot of people think prima facie, if there's some company that comes in, just writes checks and quote pays cash for houses and then keeps them off the market, they think prima facie, that's evil. Look at this. We got people living in the streets and they're holding housing off the market. That's crazy. And we'll say, okay, but notice now in the context of what I'm saying, I hope you can understand why that conclusion could be unwarranted. That once you see the fuller context, that might be exactly what they ought to be doing, right? That's what the original owner might have done if he had more liquid funds, right? He might have just moved it, to continue with that one example. The guy in Boston might have just left his house vacant, paid some people occasionally to come in and flush the toilets and whatever, mow the lawn. But he might have just kept it vacant, moves to Cincinnati, and then occasionally flies back and forth just to, allow for the marketing and whatnot and listing it on Zillow and everything to try to get that good buyer down the road. And that might make sense for him. And I think people would not be calling that guy a monster. I think most people would recognize that, well, yeah, I mean, when he bought the house, that original owner had time to market or whatever. And so that's, there's no reason this guy needs to take a huge haircut just because of his job circumstances. That's kind of unfair. He shouldn't have to eat that. And so notice in that kind of a scenario, he would be, quote, withholding the housing stock from the market for 6 months. And so if you're okay with him doing it and you understand why, well, then what's qualitatively different than if he doesn't have the money to wait? And so he sells to some other company and they sit on the thing for 6 months. And then too, like I say, on top of that, there's plenty of cases where it's not merely the passage of time waiting for a better buyer to come along, but there also are plenty of improvements. And that also feeds into, why is it profitable, right? If it were so easy, right? These critics make it sound like all it takes is someone just to come in and buy these houses and just hold them, and then they sell it down the road for more money. I said, well, how come you guys aren't doing that then? It's not like when people go to buy a house, if they see that it's from Blackstone, they're willing to pay more than if it's not, right? So the only way that Blackstone is going to be profitable in this sector is if they correctly identify homes that they think, oh yeah, what we can pay for this thing right now, and then the improvements we might make to it or whatever are just, we think the conditions right now in the market aren't very conducive, and we think that we can sell this thing for a higher price down the road. If they have to be correct in those expectations, and it's not just merely a self-fulfilling prophecy that, oh yeah, because Blackstone comes in and does it, and because it pays $200,000 for that house, it can necessarily sell it for $280,000 next year. Well, that's not written in stone, no pun intended. And if it were, well, how come other people can't do that? Because again, there's some implicit idea behind a lot of these criticisms that they feel that it's just an automatic thing that Blackstone just comes in, buys houses, earns a profit, and then sells them. And I want to say, no, that's not automatic. And if it were, then how come you guys aren't doing it? Right? And so part of the explanation is, why are some firms good at that, and why is that their business model, and they're expanding and doing it in more and more cities, is because they have certain expertise, and that they can correctly identify which homes are underpriced, in the sense that, with just by pouring in some, putting in some renovations, putting in some work, and hiring contractors to do this, and this, we could fix that thing up. A lot of people, they don't know how to do that. I mean, you can look at a place and say, you would need to fix the back porch, and probably if you modernize the kitchen and put in an island here and did this, and then, that tile in the bathroom's disgusting, you'd have to rip that up. Somebody could say that, but then you say, okay, how much budget would you need to do that, and hiring subcontractors and whatever, and to get it done well and get it done on time? And a lot of people would say, number one, I don't even want to deal with that. That's a nightmare. And two, they say, I don't really know, because I haven't done that. So these institutional money manager or asset managers, among other things, is they have a well-developed network of contractors and subcontractors and blah, blah, blah that they trust, and that they have all those relationships in place. And so it is genuinely more efficient to have them come in a given area. And if there really are, like, of all the homes where the owner wants to sell, and of the ones that, need some work or whatever, that would really help improve it before passing on to the next buyer, then that's precisely where, you want the firm that has the expertise, and to be able to do that and to create the most value with the least expenditure of funds. You want them doing that, right? You don't want a bunch of people, like individual house flippers who don't really know what they're doing, coming in and then hiring, some young reckless guys who come in and they don't know what the heck they're doing, and they do substandard work or whatever. No, you actually would like to have, companies with their name on the line and so forth, and that they have a reputation to uphold. All right. So again, I'm just explaining the benefits of it from that perspective. Okay. So you can see why there are good things that could flow out of this element. And again, if they weren't doing those things, right, in a free market, eventually they would go out of business. Okay. If it came in and they actually weren't good at picking contractors, and they weren't good at estimating, and they spent too much, and then they were like, they were trying to sell, but they couldn't find a buyer. Again, they can't compel people to buy from them. And so if they're not offering more to the original buyers, then how are they getting the housing stock in the first place? And then if they're not bringing homes to the market that are genuinely more valuable in the eyes of the buying public, the people who are on the market looking for a house, if the inventory that Blackstock has been overseeing isn't actually competitive in terms of, the improvements they made and whatever in the location for the price they're asking, why are those buyers buying from Blackstone? Again, if we're talking about a genuinely competitive open market, it's not that people are willing to write bigger checks if it's Blackstone, as opposed to if it's just some guy selling his house. Actually, I would think it would be the other way around. If anything, people would be more likely to pay more if it's, some guy who's retiring and say, I got to move into a nursing home. I can't take care of myself. Jesus, my kids grew up in this place. And I think a lot of people would feel better about writing a slightly bigger check to that guy than to something that they know has been vacant for 6 months because Blackstone bought it, right? So again, the only way Blackstone makes money in this space, assuming, it's not doing anything violating contracts or using genuine coercion, is if it's better at identifying homes that are, underpriced. And they realize, we can sink in a certain amount of funds and hold this off the market, and then, make our money back plus a decent rate of return. Okay. And if they are good at doing that consistently, they're actually performing a social service, right? That's the idea. And the same thing too, if they're renting. Okay. That, for example, I just know myself where I am with my personal situation right now. I do not want to live in a house that I own. I want to rent. And the market where I am right now is very tight. And there's this lady across the hall from me, like, she was just relieved. She just got into a place. And so as an economist, like, why, how come there aren't better options? And there's lots of reasons involved, but I'm saying if it makes sense in an area, if like rental prices are very high, how do you fix it? You need more supply. And so maybe the right thing to do is some of the existing residential homes need to get bought by a big company that comes in, renovates the place, standardizes things, and then has tenants come in and rents it out. And that will bring down rental prices and just give more options to people who they're not in the market right now to buy a house, but they need to live somewhere. Okay. So all these things all fit together. So as far as what could go wrong, so again, I think the main thing people think is just, it's automatic. If Blackstone comes in and starts buying homes, that pushes up the price. And that's why homes now are so unaffordable. And I say that doesn't make sense. It's sort of like the argument I made in a previous episode of here at InFi with oil speculators, right? Like oil speculators, if they think there's going to be a war with Iran, they might start buying crude oil and stockpiling it in their inventories and, warehouses and things like that. And that could push up the market price. And there's a divergence between, the amount supplied and consumed, sent to refineries as some of the stockpile is just getting diverted. But they can't just do that indefinitely. The whole point of building up a stockpile is to sell it when the price is higher. Otherwise, why are you doing it? And so same thing with, Blackstone or whatever. Yeah, they might accumulate an inventory because they think conditions will be more advantageous down the road to sell. But it's not like over time, just more and more homes are going to be becoming vacant and just owned by Blackstone. They're going to keep pushing off and say, one day in the distant future, they're not going to hodl houses instead of Bitcoins. That's not what they're doing. You don't make any money. The point of buying a house when it's low is to sell when it's high. If you're an asset manager, that's why you're doing it. Or you can rent it out for the flow of income. But there it's, the building is performing services, providing shelter services to people. Okay, so I think that's the main thing people think is they just automatically, when a big company buys something, it makes it more expensive. We don't want things to be expensive, so therefore these people should go to jail. And I'm saying that's goofy. That doesn't work, that story. All right, and then again, when you push, if you start giving me more details and it's things like, we don't want them getting involved because then the government will bail them out when the market crashes. Well, that's a better case to say this is why we shouldn't be bailing out these companies. And then also, again, it's naive to think the people that are buddy enough with the government to get bailouts, that the government's going to throw them in jail for doing something as benign as buying, offering a bid to somebody who accepts that and sells them a house. I would think politically it's a lot easier to be against bailing out companies rather than making it illegal for them, to engage in voluntary transactions with people. The other thing too, in terms of just trying to make it illegal, is you're not going to stop the practice. Whatever the particular rule is, they're going to figure out ways to get around it, right? If it's legal for this guy to buy a house from this guy, well, that's true of, any individuals. And then how are you going to stop them from organizing together to, pool their funds and then to buy a group of houses, right? That's going to be very difficult to prevent. And if you pass specific regulations, the market will figure out a way to get around that because, again, these things are actually efficient. Last thing I'll say here in terms of, okay, Murphy, you're really against everything, or you're a real naysayer. So what's your solution to all this stuff? Well, I think the two biggest factors involved in why our homes so unaffordable, by various metrics, and like things like not just the inflation adjusted home price, but also compared to like the average, the median salary and stuff like that. Like what multiple is the median house compared to the median salary, things like that. So, two main elements of that, I would say, number one is there's a lot of restrictions on building. Okay. So in a free market, even if somehow it were the case that these giant corporations were buying homes and keeping them off the market, and that was pushing up the price, well, what would that do? That would just give an incentive for home builders to build more, right? Just like if oil speculators pull barrels of crude off the market and store them somewhere, and that pushes up the world price of oil, that gives all the oil producers the incentive to increase the pumping on their existing wells, right? So the same thing would happen in housing. But you're right, we're not in a free market. There's lots of zoning regulations and so on, particularly when you say like housing in LA or, these major cities in certain places is through the roof, no pun intended, that's because it is illegal or extremely limited in terms of new housing that you can build. Okay, so if you want to bring down the price of housing, I wouldn't say start throwing private equity people in jail. No, I would say get rid of government rules that literally make it illegal to build more housing. That's an obvious way to get more housing for people and to make it more affordable. And then another major element, of course, is the central bank. That this happened in the mid 2000s. I'll put a link, folks. I did a ton of stuff empirically, not just, armchair spitballing big ideas. No, I went through and looked at the data after the housing boom and bust and just showed how the standard Austrian school story of the Fed pumping in liquidity, pushing down interest rates, that went hand in hand with mortgage rates falling. And then you saw housing prices rise. And then when the Fed started tightening, that's exactly when you started seeing the peak in home prices and they started coming down. That played out beautifully in terms of, the Austrian story of what causes the business cycle in the mid 2000s. So I'll put some links in the show notes page to some of those. So again, I would say the central bank. And then of course, that particular iteration, there were a lot of federal government policies that steered that extra Fed liquidity into housing. It was like the American Dream Act or something under the Bush administration, the first term, George W. Bush. And obviously like Fannie Mae and Freddie Mac. It's interesting. Like the whole rationale for some of these government agencies was, left to its own devices, the free market wouldn't allow a lot of people to get, the American dream of getting their own home. And, the banking sector, they're very stingy with granting mortgages, to only certain people or certain underserved communities. We can go in Redline and look and see how banks aren't serving them. And so all sorts of explicit, carrot and stick things coming out of Washington in the early 2000s encouraged home sales to people who were not qualified buyers, or at least at prices that could not be justified by their income and so forth and credit history. And everybody was patting themselves on the back saying, see, this wouldn't have happened were it not for our government policies. They were proud of themselves. And then when everything blew up, people are like, oh, well, that's laissez-faire capitalism for you. So, which one is it, guys? So I'm saying right now, there are plenty of policies in place that are keeping homes artificially expensive. And I mean, among other things, just interest rates. Interest rates, even though they've been coming up relative to what they were, in the Obama years, still by historical levels, they're pretty low. And so that's just, one obvious thing in terms of like mortgage rates. That's an obvious inverse relationship. Somebody has a certain amount of take-home pay. You figure how much can you devote to housing? And then you just look at mortgage rates and you say, oh, this is how much house you can afford. So there's no mystery there in terms of if interest rates, if mortgage rates in particular are artificially low, well, then home prices are going to be artificially high. That's pretty standard stuff. Okay. So I would say if you're concerned about the unaffordability of homes in the United States, and you should be, that the solution is not to throw people in the financial sector in jail just because they've engaged in buying homes, right? If they've committed other legitimate crimes, yeah, throw them in jail. But I'm saying the mere fact that, people are out there giving bids to people selling their houses that they pick over all the other bids and then selling homes to other people who pick that house with all of its attributes and its purchase price over other homes that are for sale that are not being offered by Blackstone. What's the crime there per se? That they're giving a bid that the sellers prefer to all the other ones, and they're offering a property that buyer preferred to all the other properties that were on the market. What's the big deal per se of that? Okay, so again, I just went through the case for being driven by the profit motive, allowing institutional investors to come in, buy residential properties, perhaps renovate them, and then sell them down the road for a profit. That not only is that not something that should be made illegal, that actually benefits the community. If they're successful in doing that, that makes people better off in general. Okay. Having that happen per se. Again, if you point to a particular example and they're doing something coercive, then yeah, that is an issue, but you could say that about anything. And say, oh, should people be allowed to sell beverages on the market? And you say, yeah, well, that helps people. If they're profitable, the customers like it, they're paying the employees, it's a win, 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 win. You say, oh, well, what if they're putting in poison and nobody knows? Well, okay, but that's not, you don't ban selling beverages because of that possibility. You focus on the thing that's actually the problem. Okay. However, Blackstone's particular approach, if you go to their website and check it out, for example, is not to do what I just described. Right? Really what they're doing is they buy a bunch of properties and then rent them out. Okay. And so again, as I alluded to earlier, when Bob from the future popped in to explain what's going on with this episode, I can see how in the context of everything going on, homes being unaffordable, people not being able to get decent health care, just not having stability. And then on top of all that, now it's like I can't even own my house. And now I got to rent from some big $1 trillion plus private equity firm that do like this. This is just all part of the same thing. How can you guys not see this? Right? I could see someone talking like that. And I'm sympathetic to that. All right. But in terms of the economics, what I wanted to go over right now is, again, to explain why in a purely free market, the particular phenomenon of a large private equity firm buying properties and renting them out to tenants, if they were profitable, the firm doing that would be a good thing. They would be just like any firm making a profit as long as they're not engaged in fraud or, stealing from people or whatever, doing things behind the scenes that really aren't voluntary. In general, if you're turning a profit, that's prima facie evidence that you're adding value in the sense that you're taking resources or inputs at a certain dollar price, combining them into goods and services that you sell to your customers at a higher price. That's what it means when you turn a profit. And built into that is the cost of capital. Okay, so let me just flesh out a little bit though, how does that help anybody, or what are the checks in place? So I don't need to elaborate on it too much because I think a lot of the ground that I would have to go over if I were doing it from scratch, I already kind of sort of covered with the house flipping example. So just, real obviously, a big company that has a lot of relationships and economies of scale, they can come into an area and buy a bunch of properties, do some standard renovations. Maybe they have contracts with parts suppliers and things like that they can get new furnaces and new window air conditioning units or whatever because they buy in bulk. And they're doing this in 19 different cities at the same time. And so maybe they get better deals on that sort of thing than if individual, like even just local companies were looking to get into becoming landlords, and that it's just, there'll be economies of scale there. And I imagine some people who really just don't like capitalism would say, well, that's not fair. How can the mom and pop, the local community, the landlord lives down the street from you, not this disembodied corporate suit you call up and you can't even get a human on the phone. I understand that, and I chafe against that stuff in my daily life too. I get it. But I'm saying, on the other hand, there really are legitimate economies of scale, right? If one firm is able to cut the deal with the air conditioning manufacturers and they get the products 20% cheaper, and they're allowed to pass some of that through, well, then that's why it works. And again, let me just mention there, you might say, well, how do you know they can pass this? Or what? Well, again, if they didn't, then how are they able to go in and, quote, take over a city or penetrate the market? The reason they're able to do that is because a combination of they're offering more to the sellers than what their competitors are, and or they're providing better service at a lower rent than the competitors are, or some combination of those. Okay, so that all goes into it. And so when you're trying to say, well, where are they getting some of their edge from? I'm saying the fact that they're big, that's part of it. And that they might just develop some expertise in certain areas, right? That it's just that, it gets pretty straightforward. This is the 100th time we've done this. Come in, buy the property, do some standard renovations, figure out how to get the tenants in there. How do you screen the tenants? Like, how do you figure out what kind of people you want to let in that are going to trash, so you're not having to just evict them down the road. There's lots of things like that just from doing it at scale, you learn things and you improve your practice. Okay. And some things, again, I'm not trying to be naive. I understand. I lived in the place I'm in right now. It was taken over, not by Blackstone, I don't believe, but by a bigger company, bought out like just the people who own the condominiums where I live right now. And it was clearly like a more sleek, like no nonsense. This is how we do it. Here's your new portal. Pick your password. You log in. The website was much more professional looking. And so, but they're, boom, boom, this is how you do it. And they came in and they did a bunch of repairs and things, right? But they're also gruff. And they're not screwing around. Like you wouldn't want to be as late with the rent with these people than you were with the previous management. Okay. So there's those pros and cons, but I'm saying they're definitely running the place more professionally. Okay. And yet they did raise the rent, but it's comparable to what it is in the region. Okay. So anyway, I'm saying I'm aware of some of this stuff in case people are inclined to think, oh, you just don't get it, Murphy. You got your textbook models. I understand why if something like that's happening to you in isolation, but partly what you're not seeing is how inefficient it is if you just have mom and pops doing things, that there's certain things they might not be catering to. Okay. And again, just that's why I stressed, getting the economies of scale of bulk discounts on the appliances and things like that. Okay. That's just one obvious example. In terms of the economics, I don't want to draw this thing out too long because I spent so much time walking through like the pure house flipping scenario. But in terms of like, what are the limits the competition would allow, and like if this big company went, quote, too far, what would be the natural checks that would kick in? Let me just walk you through this. So people need to live somewhere. They need shelter services. They need to be in a building that keeps them out of the rain, that has a refrigerator, a microwave, possibly a bed, a shower, right? Yeah, there's different combinations of these things, different ways that you can spend the money to obtain the flow of shelter services. And a big distinction is you can rent or you can buy. And that can mean, like what we might think of as an apartment unit, or it can mean living in a house in a residential neighborhood. That now that's becoming more and more of a thing that you can rent that, particularly with Airbnb. Now that's becoming, more of a phenomenon. Whereas I think 30 years ago, people kind of pictured that, no, if you're in a house, that's because you own it, or, the bank owns it and you're paying the bank off. Okay. So that's a fundamental choice that people make. And there's pros and cons of both approaches, right? That, for example, if you're not sure that you're going to even be in this city where you are right now, 3 years from now, you probably don't want to buy a house. You want to rent and be nimble. On the other hand, if you're pretty sure you're going to stay put, and then depending on the numbers, especially if you have good credit, you can get a good mortgage rate and so forth, it might make sense to buy, because if in the US, there's lots of tax advantages if it's your, owner-occupied house, and, mortgage rates, even though they've come up recently, they're still low by historical standards. And, you could always down the road, if you need to, if your situation changes, you could always move out and rent it. Okay. So there's a lot of flexibility. I've been in seminars, which with my work in terms of the various people I consult with and so forth, that I've sat through plenty of seminars from real estate gurus telling the crowd, hey, this is how you get into real estate and you become a landlord professionally. Do it on the side at first. You and your wife go do it on the weekends, find some properties in your neighborhood that you start small, fixer-uppers or whatever, so you don't have to put too much of your capital into it. And then once you get it under your belt, boom, 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 and then pretty soon you're going to be quitting your day job. And I'll be making, you see these infomercials and stuff. That's not fake. Those programs are real. And if you have, you don't mind replacing a toilet and answering a call at 3:00 in the morning because somebody's pipes broke, you don't mind doing that, then yeah, that's a way you can certainly get into real estate. And there's plenty of people that do that. Okay. So my point is there's pros and cons of both approaches. So somebody who's willing to take the headache on and the risk of buying a house, yes, if things go smoothly, there's lots of advantages. So even if the numbers, so certainly, like I say, in those seminars, they'll try to show you ways that, ideally, especially you're just dipping your toe in, you want to find a place that will cash flow right away. Meaning you buy it, maybe you fix it up a little bit, you get some tenants in there, and the amount they pay you per month is enough for you to pay the mortgage on it. And then that's like a no-brainer, right? Because you're building equity in the place and it's cash flowing. It's not drawing away from your other finances. And then, once the place is paid off, you've got that mortgage, the rental payment coming in free and clear. But even if it doesn't quite hit that threshold, still, a lot of people, again, depending on the situation, would say, it's fine. You buy a place, and even if what you're renting it out with the tenants doesn't quite cover the debt payment you're making, it could be conventional mortgage, or, if we're talking about institutional buyers, they could have other ways of raising the funds to buy the place. So when they calculate like their internal cost of capital and figure out in terms, like how much really, the fact that we had to spend $300,000 acquiring this property, we could have done something else with that $300,000, right? So that's costing us something opportunity cost wise, even if we quote paid cash for it, right? If you're a big fund, that's how you have to think internally in terms of, does it make sense for us to buy this property? And so there's lots of considerations involved. I'm saying, even if in the beginning you're not, all things considered, especially like how much you got to pay the management company and things like that, if you're outsourcing that stuff, even if you're not quite breaking even, that's fine if you have some external debt that you're raising. And the other thing too is, because that rental rates are going to go up over time, right? So especially if you have a conventional fixed rate mortgage, even if right now you're whatever, $400 shy each month of the mortgage is above how much you're renting it out for, probably you think that's okay because 5 years from now, I'm going to be able to cover it. And just as inflation keeps getting, as prices in general keep going up and up, that's fine. That's going to fix itself, that problem. And again, with each payment, you're knocking out more and more of the principal and getting closer and closer to just having that rental income come in, quote, free and clear. Okay. But so you say, oh, so how come everybody does that? Because it's a pain and it's risky. What if the tenants trash the place? What if just they move? And then it takes a bit to find the right person to get back in there again. You miss a month or two. Oops. So that was a stream of income that you were banking on that now is not there. Okay. So lots of stuff going on. So fundamentally though, just big picture, in a given community, there's how much you pay to rent as a tenant for a certain type of property, 3 bedrooms, this in this kind of area. Okay, define what the property is, and then you can say right now in this region, what's the rental price of that if I just want to rent, versus if I have good credit and I can get a good mortgage rate and blah blah blah, what it would be my mortgage payment on that, right? And those two kind of can't get too far from each other, because if Blackstone, let's say, just comes more and more into a region, what happens? Other things equal, they keep buying up more and more properties, pushing up the purchase price of the real estate, right? So that now first-time home buyers looking around, what's left on the market? Oh, those prices keep going up and up because Blackstone's sucking everything off the market, right? That's the allegation. Okay, and I'm saying that's true insofar as it goes. But then the flip side of that is the more rental properties now that are on the market, because now Blackstone is taking these properties. They don't just buy it just to sit on it forever. They buy it to get income, a flow of income from it. So they buy these properties, do some renovations, whatever, get their people in there, get it all up and running according to their cookie cutter approach, perhaps. And now more properties are available to rent in that neighborhood or that region than was the case before Blackstone came in and started operating. And so what does that do? Other things equal, it pushes down rental prices. It's cheaper to rent a 3-bedroom, blah, blah, blah house in this area now because Blackstone's doing that. Okay. And so if you're worried about, the WEF and whatever, say, oh, okay, so why doesn't Blackstone just buy up every single residential property in the country and then everyone has to rent because there's nothing like, and say, well, clearly well before you got anywhere near that threshold, what would happen is it would no longer be profitable to do that. That rental prices would get pushed down so much and purchase prices of the housing would get pushed up so much, as Blackstone kept doing that, other things equal, that at some point it wouldn't make any sense. You'd say, no, why would I pay $500,000 for this particular building when, we run the numbers and we have tenants in there right away and blah, 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 we're just going to get this flow of net income off of that $500,000 upfront investment. And then, no, we could make more a higher rate of return on our capital deploying it elsewhere. We're not going to keep pouring it into this. We've already, turned the screw too much on this one. That's the natural feedback mechanism. At some point it would no longer be profitable to do that because their very actions would have pushed up purchase prices and pushed down rental prices until it no longer made sense. Okay, so that's the fundamental economics of it. I'm not going to walk it through here because with this episode now already so long. But my point is, once you get that, you can go through and see that's exactly what you would want them to do. If it were the other way around, where, it does make sense, there's a high implicit return of capital involved for them to buy the properties and then rent them out, that's what you would want them to do. Just as in general, if there's a sector in the market economy where the rate of return, all things considered, including the riskiness of the project, is the most attractive to investors, that's what you want them to sink their money into. Okay, again, other things equal, with all the necessary caveats. But as a general rule, that's a true statement. That's the signal to say there's inadequate provision of these goods and services in this region, in this sector, because the markup from the inputs into the outputs is highest here. And that's why for investors who perceive this opportunity, they should rush to it because this is where the market is being underserved. Okay. And again, if you have never seen that spelled out, I'll try to find a good example of that. It's either something I wrote or maybe a lecture I've given before as to why, in general, profit-earning businesses are providing a valuable social function. That's an indication that they've done something good. They corrected the mistakes of others or the oversights of others. Okay? So same thing here. Last thing, let me just flash up a few charts since I took the time to go ahead and do this addendum. I might as well show you some charts that I dug up. So here is consumer price inflation adjusted S&P home price index for the US going back to like 87 or something. Okay. So in other words, what I did is I took the S&P US National Home Price Index and I divided by the CPI. So I'm just saying I've adjusted. So this chart shows that the housing bubble in the mid 2000s looks sharper and the recent rise doesn't look as pronounced compared to that as if you just looked at the unadjusted S&P home price index. The idea is the standard, the raw index went way up after 2020, but so did consumer prices, right? And so I'm saying once you adjust for that, you see home prices, yes, they're higher now than they were at the peak of the housing bubble in the 2006, 2007, but they're not as much higher as you would have thought without looking at the CPI adjustment. Okay. So you see here that, it went way up during the lockdowns, and that made total sense as to why that would happen. Okay, and then it kind of leveled off. And let me just show you mortgage-backed securities. This is the amount of mortgage-backed securities that the Federal Reserve banks own. So you can see it was zero up until the financial crisis, right? The Fed was not allowed to buy mortgage-backed securities. Like, what are you talking about? That's crazy. Can't do that. But during the housing meltdown, all of a sudden the Fed started doing all kinds of extraordinary measures. And so in 2008, the Fed started buying mortgage-backed securities. And you can see with the various rounds of QE, just acquiring at the peak there in 2022, what is it? About 2.7 trillion. Okay, so when you want to understand what has it been in recent decades that has promoted institutional investment in real estate, especially residential, it's stuff like this. It's not just freedom of commerce all of a sudden, that, economic liberty. No, it's stuff like this. So if you want to say the Fed should get rid of its mortgage-backed securities, I'm on board with that. And then another issue is mortgage rates. So this is a chart of the 30-year fixed rate mortgage average in the US. So yes, it has come way. By the way, with these Fred charts, you got to be careful that y-axis here starts at 2.5. So it's not that mortgage rates got down to almost zero. It's they got down to 2.5, which is still really low by historical standards, you can see. All right. So again, when you're trying to understand what the heck, why has housing become so unaffordable relatively recently compared to like your parents or certainly great-grandparents, this is why, or this is a main reason why. Other things equal, when mortgage rates come down, that makes purchase price of houses go up for a given, quote, house payment, monthly house payment. Okay. So notice too, what I'm saying ties in that mortgage rates zoom back up in recent years. And as you looking at that, the mortgage-backed securities one that the Fed holds, that actually peaked in 2022 and then has been coming down steadily. All right. So it's not that home prices have started falling, but what I'm saying are two of the drivers, I would say, besides just mere freedom of commerce, that kind of fits the data. Like you can see home prices shoot way up when the Fed starts loading up on mortgage-backed securities after the COVID scare and mortgage rates continue to fall, right? That all lines up and that makes sense, okay? Okay, so in conclusion, again, if you want to point to specific immoral or illegal things that Blackstone employees or affiliates are doing, okay, by all means, crack down on that. But don't just do a blanket ban on the practice of institutional investment in retail, or I keep saying retail, in residential real estate. For an analogy, last thing I'll say, since again, it was Daryl Cooper's interaction with me that spawned this episode, maybe something that the Cooper's fans will appreciate. I'm sure they've seen this a lot in interactions on X, where a MAGA person will want to, or at least a subset of them, will want to deport or do other things to like campus activists who are chanting from the river to the sea or something. And then, a defender of those students was like, what are you talking about? They're not allowed to say they think the IDF is overreacting. And then the defenders of the crackdown will say, are you kidding? Well, there's this example right here on this campus where, this Jewish student was beaten on the way to class. Look at, he's all bloody. So you think that's cool? It's like, no, but it's already illegal to beat somebody up on campus. You don't need to pass a sweeping anti-Semitism, right? So whatever you, the viewer, think about those issues, I probably just maybe lost half the audience by bringing that up. But again, I'm saying that because I'm pretty sure Dale Cooper's audience and fan base will get what I'm saying with that. So I'm saying, don't view this as me defending every last interaction from somebody who is engaged in this space. I'm defending the principle of institutional investment in residential real estate and saying, if it's profitable, then per se, that's actually benefiting the community. We should want them to do that. Okay, thanks for your attention, everybody. This is Bob from the future, signing off.